Wonderful good day, ladies and gentlemen. Precious Metal Summit 2015. We start here in Zurich, and my first interview partner this morning here is Chris Richter, the President and CEO of AuRico Metals. Chris, good morning, and thank you very much for taking the time.
Good morning. Happy to take the time.
AuRico, what is the company about? You are a royalty company, not a usual mining company. Please give us a little bit of an insight.
That's right. So we're a new company. We've just been around for about 3.5 months at this point. We came out of a merger between Alamos and AuRico Gold. We are quite unique. We have a high quality portfolio of royalties, which are great in this market. They provide about $9 million a year in income to us, Canadian dollars. But on the other side, we also have a large development opportunity in British Columbia, which we call Kemess. It's about 10 million ounces gold equivalent. Right now, it's quite advanced, and I think there's a lot of upside associated with that side of the business in particular.
Okay, fantastic. When you say, okay, royalty income, that's on the one hand, but can you give our viewers an example how that works? What do we have to imagine? What does it mean? How do you work that?
Sure. So at present, we have 5 producing net smelter return royalties on 5 operating gold mines. One of them, just as an example, is a 1.5% NSR, or net smelter return royalty, on the young Davidson gold mine, which Alamos Gold operates. That's a world-class mine, it's a world-class operation. It's continuing to expand, and we get 1.5% of the revenue generated from the sale of each ounce of gold at that operation. So in a way, you could say that 1.5% of all the ounces are ours, and we have no exposure to costs. So particularly
Which is important, because there's no risk.
It's great. So we have no risk as long as the mines stay open and operate. We get paid, and if the metal price contracts, the margins do not contract as much for us because we have no exposure to the costs. So we get paid just based on the revenue, and we know we're very fortunate to have that in this metal price environment.
I believe that, yeah, absolutely. How did you get then the royalty? Do you provide project financing? Do you buy a net smelter return? How does that work?
So there's a number of pretty high-profile royalty companies, including Franco-Nevada, Silver Wheaton, Cisco, Sandstorm, Royal Gold. They all go about it somewhat differently. Yes, at times royalties are put on projects in an effort for them to become financed. Really, we came to own our royalties because they were held by AuRico Gold prior to us being spun out of that company. A royalty was put on the young Davidson operation as part of the spin out, and we recently acquired some royalties, and we acquired a privately held royalty company. So at times there's a financing angle, but arguably there's a lot of royalties that are held either by private individuals or smaller companies, and those are of interest to us, and so we actively pursue acquisitions if they can be done so accretively.
Fantastic. What I saw in your presentation, you're a very healthy company. You have $25 million in cash around. You have a market cap shortly over $100 million. So 25% is already cash of your value. And you work in Australia and in Canada. So you are in 2 of the top jurisdictions in the world. You don't face any country risks. Let's talk a bit about, let's say, 2016. What do you want to achieve, and what will be your next step to develop the business further, like Kemess, you mentioned it already.
Sure. So you're right. In terms of our valuation, we're probably trading just under 100 million right now. We were spun off with 25 million Canadian dollars in cash. And there's 4 analysts that cover us to date, including National Bank, Scotia, Macquarie. They actually approximate the value just of our royalty portfolio at just over 100 million Canadian. So clearly, I think there's opportunity on value, and importantly as well for your viewers, royalties often trade at premiums. So I think there's great value there. But you touched on Kemess, and that's really what's going to keep us quite busy throughout 2016. There's a lot of catalysts that we're looking to progress there. So Kemess, I mentioned, it's in British Columbia. A feasibility study was completed in 2013. We want to update that feasibility study in the first quarter and release that into the market. So I think that's quite significant. Kemess East is separate from the Kemess Underground project, and we've been drilling there. A new resource update will come out on Kemess East also in the first quarter, and there's a lot of permitting efforts that we're pushing forward right now. So we're really pursuing a strategy where we hope to be fully permitted at Kemess with an environmental assessment in hand before the end of next year. And per the sum of parts valuation we went through at the beginning, Kemess right now gets no value in our company, and so we think there's a ton of opportunity there. Not least because Kemess is actually a past producer, so there's $1 billion Canadian replacement cost of infrastructure at site.
So that's already there.
It's already there,
Wow.
and it's actually very recent infrastructure. It was operating up until 2011. We've been maintaining that infrastructure since. It really gives us a huge head start as we look to advance Kemess again.
Wow, fantastic. Can you already provide maybe some numbers, I would call it? What do you think could be an annual production in the future out of Kemess?
Well, sure. The feasibility study came out in 2013 with all these numbers specifically laid out. Average production per that feasibility study looked at 105,000 ounces of gold per year and another 45 million pounds of copper. So copper and gold are both about 50% of the economic value at Kemess. The updated feasibility study, I think, will probably have numbers in that sort of a range. The mine life per the feasibility study was 12 years, so you can assume that for a 12-year period. Kemess East, which was a discovery last year, just a kilometer further east, would really doubles the resource on the property. So perhaps there's an interesting angle there as well.
Super. Can you give us a short idea about, let's say, something like the average mine life you have on your projects?
Sure. That's, with regards to the royalties, a very important question.
Exactly. Because when they end in 3 years,
Of
it's
course.
nice, but 3 years you are done.
It's nice. So Young Davidson, which is our most valuable royalty, has a 17-year life just on the reserve base that exists today. So that is about as long a gold mine life as you'll find anywhere in terms of operating mines. The others as well, we feel, are generally of a good life. Fosterville is perhaps our second most valuable royalty. That's one operated by Newmarket Gold down in Australia. In terms of reserves, it's a little bit shorter, but in terms of resources, at current production rates, it could be 15 to 20 years. So it really depends on how much of the resources could be converted to reserves. But the Newmarket Gold guys have had some great success just over the last 12 months, also on exploration. So we think that bodes very well. The same can be said for our other royalties. We have royalties on the producing Hemlo and Eagle River mines, which have been operating for 30 years and 20 years respectively. So we feel good about them going on for significantly longer still.
Fantastic. Super. Chris, thank you very much. It was a pretty good overview. All the best. And for 2016, show us that Kemess is working.
Thank you. Thanks for having me.
Thank you. Ladies and gentlemen, it was Chris Richter, the president and CEO of Oro Metals. And well, you heard it. It's an outstanding company with a very, very low risk compared to a normal mining company. And approximately 15 to 20 years the mines are running, they receive their net smelter returns, and approximately $9 million per annum, which is, very good income, I would say. And the future looks quite bright with the Kemess property, with the Kemess development. So check out the company. Thanks for watching us. Bye-bye from Zurich.